Friday, June 13th, 4:08 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We just finished another week of trading. Next week, very interesting, because Sunday night starts the G7 meeting. G7 nations. Yep, that will go over for a few days. And then next week, United States, the Federal Reserve meets to vote on interest rates. Plus next week is the United States holiday. So the markets are closed just after the middle of the week. Yep, interesting times we are in this week. We're already halfway through the year. I think it's important to look at the stock sectors. If you don't know, the S&P 500 is a stock index. It's broken down into sectors. You could outperform the S&P 500 stock index without buying single company stocks. You just buy the strongest sector. Dollar cost average, buying on the dips. And when the market pulse changes, that it's no longer the leadership, you own up and you get out of it. And you pivot into the next leadership. So we're looking here at 5-year charts. Each candlestick's a week. And in order of the size average, meaning that we'll go in order of what the weighted average is in the S&P 500. So first on the left, just to show you, these are watch lists. This is the futures. Let me go back to the stocks indexes. The cash stock indexes closed red. Got it? Closed red. If you don't know what they are, check out my other videos. The futures are still open for another hour. These are the 11 sectors. 2 of them are green. Where I just showed you, the stock indexes are red. And then you have the Magnificent 7, all red other than Tesla. Yep. This move is not really one of the 11 sectors, but I keep it there because it's agricultural. It's important to me. So again, each of these charts are 5 years. Each candle is a week. The name of the sector's here in white. Technology. To the right of it is the stock symbol. Technology. Look at this past 5 years. Bottom left is the low. And this year made the high right there at the beginning. See this yellow horizontal line? And look at that. This week, we just shy of taking out the high. Little red candle. Bearish pin bar. You got that? Bearish pin bar. Yeah, so this is no longer valid. Let me remove that. Last week was that strong impulse move up. Okay, so maybe we'll get a retracement next week. Opportunity to buy the dip. Well, we still got a gap down here. Hasn't been filled. That's concerning. I would not want to be buying at these highs. I'd be looking for that retracement. Again, this has been leadership. Big difference. Technology. Healthcare sector. Not leadership. Look how close it is to the low of the year. So let me add a top for the right there. Plus we're below the high of last year. Not leadership. Nope. Do some house maintenance here. There we go. Again, let me go back one. Technology this year made the all-time new high. And we're almost there again. That's nice. Healthcare, well, we're below the highs of last year. And again, much closer to the lows of this year. It's still struggling. Financials. Yep. This year made the high. This week, look at this. Red, big body. Very concerning. Huge consolidation. Big red candle bodies. Bearish engulfing candle. Whoop. Might expect more of a retracement on the downside. So what we're seeing here is weakness here at the highs of several of them. All right, here is the consumer discretionary, XLY. Very interesting. Below the highs of last year, below the highs of this year. Here's the low of this year. It's in a consolidation phase where that impulse move down was. So we got several things in consolidation phases. The longer they spend there, the more energy they spend in these consolidations, building energy for the next breakout, one way or the other, will be a big trend. Communication services, just shy of testing the highs of this year. So again, concerning. Big red candle. I wouldn't want to be buying up here, but it's nice, strong move up here. Look for that retracement. Industrial, inside candle for the week. They couldn't even decide what to do. Yellow candle means they didn't take out the high or low of last week. Indecision up here. Potential retracement. Lots of gaps too. A lot of these we see gaps. More likely they're going to go back and fill those gaps. Sitting on hands, setting price alerts to get notifications when they reach those. Good money management. Consumer staples. Yeah, not impressive here. Look at all this. Since last year, here's the high of last year. Looks like it's going to have further markdown. Energy. Big move up this week. Interesting. Not surprised because the events occurring in the Middle East. So, never filled this gap yet here, neither. Nope. Utilities, again, huge consolidation here, still below the lows of last year. Below the highs of last year. And real estate, yeah. So next week, with the Federal Reserve meeting, it will have an impact, either positive or negative, on real estate, on the builders, and the big box stores that have a correlation to the real estate. The U.S. is spending more money than it takes in tax revenue. The U.S. has higher deficit to pay. U.S. is raising interest rates to sell U.S. treasuries. And what's keeping interest rates high for the real estate? Yeah, it's the confidence of the economy as a whole. And the mortgages have to sell. And also the treasuries that sell. So again, unfortunately, the interest rates have not gone lower because policies from the U.S. Congress, not the Federal Reserve, Congress and the administration are spending more money and not paying down. So the effect is real estate is still going to struggle. Mortgage rates not likely going to go lower anytime soon. XLB, basic materials. Yeah, below the highs of last year, struggling up here too. And there we go. That was 11 sectors. Well, if you're in an investment fund, a mutual fund, or if you're in a stock index that are performing worse than any of these sectors, why would you be in that? Again, good money management. Get out of losers and go with winners. There's plenty of opportunities. And it's not just the stock market. I show others. All right. Thank you as always. Taking the time to watch this. That's it for the video.